Good morning. All right, so is 90% of a China deal enough to end yesterday's correction? I think that's unlikely, but let's look at the charts and see where we're at here. So right at the top there, as we know, and I alerted everybody in the room about that the wrong way option traders were loading up on calls in anticipation of this market continuing to go higher. And we know historically that isn't likely to happen when that group jumps on, with all in, so to speak, where the numbers were up 0.62, 0.63, and they continued to buy call options as it started to drift down. And yesterday, at the beginning of the day, they continued. So they were, let's say, overly optimistic that this market would continue. And that doesn't mean the market can continue to go higher, but it just means on a short-term basis, when the historical wrong way option traders believe with total confidence that the market will go higher, it rarely does. So yesterday, when the buyers didn't show up, selling just continued and continued and continued. And so now we're down almost to this gap fill here. There are initial support here. It tried to stall there initially and it couldn't hold. So this gap fill here, markets are up here a little bit, and they were up more than they were. And so the way we'll look at this in the futures, it's a bit clearer because how actively they're trading, but maybe this is part of where things begin to bottom out. We'll see. There's still more news coming, economic news this week, and whatever news will come out of the G20 summit and all. So it's a little early, but let's just go to the S&Ps here. The fact that prices didn't get up to this 29, 41, 42 area, that minor resistance, I see that as being a little bit more bearish, that traders came in and sold it before it even got there, because that was the obvious place where if you had bought this overnight and it moved up, that would be the obvious place where the sell orders would be. And if it was really all that bullish, those comments, it would have probably pushed up through it. So it couldn't even get there, and it's already pulling back, and we'll just have to see whether this can hold in this area. Now, if at the end of the day, this is what we're looking at, where we've got a candle body at the bottom of a wide range bar, that sets up a continuation pattern to the downside. Now, the thing is, we got support. I'm just going to duplicate that line there. We've got support under here, the 2900, 2800, 2880 area. So the downside, I do think, is limited unless some news comes out that's so terrible that the market's pulled back deeper. But you really can't look at this chart structure, so to speak, with that bearish of a bias to say, oh, the market's going to crash down below here. It's just not reasonable to think that at this point. Now, if prices were to hold here, excuse me, we looked at the internals yesterday and sentiment. I'll just pop it up here for a second, just take a look at where, it kind of pushed up a little further than where it was yesterday, and it come in a little bit at the end of the day. And so markets, this little correction that's going on there is relieving some of that pressure that was created by the move higher. But if prices hold here, that's not an ideal setup either, because it opens up the possibility of an M top. So when we see corrections begin after a move, right, little correction there, and that was a decent sized move from this little correction here. But if this is as far down as prices will come, that sets up the potential for an M top and then possibly a bigger move down. So we've got a lot of information that we need to be created, which means over the next several days we'll see. But after a move like this, I think it would be ideal from a bullish point of view for this little blip here that's starting to fail and come down here, and then potentially even just to get to this level here, it's a much bigger move. So what I see happening here is the potential for a trading range as the markets digest the gain that's occurred this month, and that's fine. It's just that, when we see markets reach an area of resistance, which they have, this made a little peekaboo new high, it's reasonable to think that some congestion is going to occur. Right? Just like I wrote about in the Monday letter and in that video, that some congestion here would be a positive versus the markets just, say they would have, instead of going down yesterday, would have blasted off and would have reached, that 3,000 area. And then pretty much you could say, well, the long party is over. It's going to be a very long period of congestion or a correction is coming. So consolidations are a good thing. You just have to recognize the probability that they're at hand so that you just don't get chopped up in a market consolidation or corrective price action. So, yesterday was good for the short side. It trended down. Today, just may be that wait and see kind of a day, whether it just chops around here. It's what we do every day is we mark off our reference points of support and resistance. And now we've got an initial reference point here, right? This little chopping around that occurred right here that we looked at yesterday. Right? I jokingly said when we were reviewing DLTR in the room yesterday, oh, look to the left, look, magic. Prices are stopping at that prior support. They hung around there for a while and they dipped down again. As we reviewed, the next support level was right there, and that's where they stopped. So now we've got, this overhead resistance. We've got this support that's been retested. So what we're going to be looking for today is do prices either stay within this little range that's been created here? And if they come back down, we could say, well, that news that came out, China deal, 90% certain, everybody's going to say, well, the other 10%, I'm not so sure that that's going to happen. And this confidence that pushed markets up, that's gone. And of course, if it breaks that area, then I didn't mean to push it that far. We've got this little void for prices to be able to drop down into this area. So step-by-step process of, prior resistance, daily chart, look for some consolidation or a pullback, right? And we look at the intraday charts and we see the choppy price action. We've got the breakout failure, right? The break below support, retest of what was support becomes resistance, down it goes to the next area, so on and so forth. The factory work of looking to the left with bar by bar analysis. What's the trend now? On the hourly, it's down. It's still up on the daily. And we will see whether prices will hold here or we get that further correction down to a more meaningful level of price support, which would be ideal for getting long down here for a move back up. So we'll see how it unfolds. Qs, same story. Well, not quite the same, but, broke down and didn't even get to that support level. So one market can hold another market as it begins to stabilize, and then buyers come in to, in this case, the Qs, where the S&Ps hold an area, and look, traders that are trading the futures, they know where the Qs are. So and as I flip back and forth from one to the other, depending on which is showing relative strength or weakness. But I know the reference points, as we're talking about right here, of where these different markets are at. Now, these came down pretty hard. They didn't get quite to the gap fill either. And so they're holding here. It's going to be the same story. What does it do here? Can it retest, make a W, try and move back up, which the upside, I would say, is limited based on this breakdown. And the downside is probably relatively limited as well. Well, right now we're in a little bit of a range-bound market for now. Let's look at the S&Ps and the futures, which are going to be pretty much the same story, but we can get a little bit of a cleaner chart and the same thing. Trading range, which way is it going to go? Upside is likely limited, but we're in a little range here. If it breaks here and gets below here, that's where I think from a day trading point of view, the bigger trade is going to be. So we've got this short move down, right? MT concept, wide range bar in a higher time frame is a momentum move in a lower time frame. And that is what created the price void here. We had a retest pattern. It popped back up. Now the battle begins where the reference points get tighter. Which way is it going to go? Let the soldiers go out there and battle it out. We'll observe who gets killed within the battle, within this range right here, and then we'll look for trades accordingly. And ideally, since the bigger void is down here, and it breaks to the bottom and comes down to this next level. So we'll see how it unfolds, or whether, we're going to be sitting here today, while the battle continues and it's just choppy, where it's just trades within this little area down here at the bottom of that wide range bar. Qs, same story, so far. Now, look, if the buyers win this skirmish, if you will, and they can get above this level and they can hold it there, then we're going to be looking at a red bar being ignored, which would be bullish. And it's kind of like, oh, was the correction a one-day event? Well, let's see at the end of the day how far the buyers can push into the big red bar from yesterday. Right? So theoretically, if they can get above the pre-market high, it opens up the door into this little mini void here, right, which is at the top of that bar. And if they can hold it there at 4 o'clock, well, hats off, right? You won. Let's see. Right now we're waiting to see, right, who's going to win in this little chop that's going around right here. Dow, same story. Not as big a red bar, but, broke. It's holding it. It's in the bottom half of that bar there. We'll see what it does. This, again, has the void below. As you can see, if it comes down here, buyers would give it another shot here. Forget about this at this point. That's been used up. It's finished. And if we can get below here, then we're going to see, right, a nice move lower to the next reference point, because that's where the buyers are going to want to step up down there, just like they did in this area. Wash and repeat. Right? Cuts down here, they'll do the same thing. And then we'll be at a more meaningful reference point if it gets down there, where it started this move. Bonds are down here a little bit, just consolidating their gains. They had moved up yesterday. Wait and see. It's just chop back and forth. This little battle's going on. Oil up here again, pushing up deeper into this resistance area from the W bottom. I mentioned down here in that pre-market, down in those days there, to look for this setup to form. The wide range bar was the event that said, yes, they're going to hold it, and it entered into the void. And now it's closed the void. It's up against the 200. It's up against the 50. It's up against the pivot high. And in all likelihood, this move is near its end, which would just lead to some congestion. So buying, this is, as a side note, this is the kind of breakout that will break your bank, meaning a run up off of a low that then takes out a pivot high, and buyers that come in and buy and think that that is a breakout to buy are mistaken. And those are the kind of breakouts that typically pull back. Those buyers sell at losses. New buyers come in on the pullback, and that is where professionals enter looking for prices to continue to move higher. Or if it can go sideways, which would be even more bullish than the price correction, you get a time correction. But buying a breakout after a greater than 100% retracement historically just does not work out very well. Why we don't do it. Gold pulling in here a little bit and had a correction day yesterday, topping tail coming in. Beautiful move. We talked about the big breakout that occurred on the monthly time frame. That is suggesting it's going to go higher. Ideally, we've got a few more days left in this month where you can actually get a close above these highs. We'll see, but this is an impressive wide range bar breaking out of a multi-year consolidation that is suggesting that prices could go higher. So we shall see how that all unfolds. And you can see there's a lot of activity here. Pre-market, MU gapping up. That had been under a lot of pressure. So gapping up above this resistance, that'll be a positive for the markets. But it's just one stock in one sector, but it's a sector that's been under some pressure. And certainly this one has. Lastly, before I let Dan take over today, is MT Live at 12 o'clock. I'll drop the link in here. Someone's asking, is there any way I can get in contact with you guys? Because I cannot find an email message for you on Facebook. I'm on YouTube. We got so many comments on YouTube, Lee, but just email me, greg@mastertrader.com. And I will certainly answer your email. All right. All yours, Dan.
All right. Thank you. All right. We got a lot of gappers here. I'll go through the positions real quick. All right, weekly, real quick. Google call spread yesterday, and I tightened stop. So we're fine. It's coming back down near the lows. Facebook, same. J&J put spread looks fine. UNH put spread. We need that melting ice cube for Friday. Finally, lift. We have a put spread. I said we were going to add over 64.40, and it's kind of gapping up there. So, maybe 5, 10, 15-minute high. We'll do another put spread for next week. Swing and options trader, Mylan long stock, it's gapping up, looks good. ADS short stock, tighten stop. Pepsi, bull call debit spread. OAS long stock, Halliburton long stock. TUFN put spread. IR covered call. See, when it broke out and failed, that's when I leg into a call, lower the cost basis. But the pattern's not destroyed yet. RPD, we had a big stop on this. We had a covered call. Wait, let me check the stop on this. We did a half lot. Yeah, we had a big old stop under the, under this. So we're still in it. I'll be looking to do the back half. Maybe, maybe not. LH, a put spread. Funko, half lot, long stock. Mo, put spread. Which is on probation now. I didn't see that week close. AON, long stock. Honeywell, bull call debit spread, same thing. When it broke out and failed, I legged into a debit spread. Same thing as a covered call to lower the cost basis. WTR, long stock with a tight stop. ELY. This is our longer term trade. Close week, the stop is under here. We entered right on this gap up bar right there. So now it looks like a small breakout failure. We'll just let it play out. Bro, long stock, lift. We have two positions, covered call and a put spread. Kim, finally, longer term trade, half lot. All right, gappers. WDC gapping up 43.40. It's bullish, but not a tier one. GBT 58.75, gapping way the heck down here, but no setup. Remember Beyond yesterday when I saw it percolating here into the close? I said, this looks like a put spread candidate for Friday now. And now look at it, up almost $9. Let's watch that for a put spread for Friday. Hive, kind of looks like one of these penny stock toys, but bullish gap up right to this major resistance. That's not my style. SNX, $97. Oh, there's a nice gapper. I'm putting that right here. And that was on earnings. Look, it's gapping right over this this pivot with a price void. I wish it had a little more volume pre-market to give me a better pattern, but it's that looks good. LYB, 86 and change. I can't tell what it's doing. AVAV, bearish gap. I don't like the way that trades. STT got a downgrade. That's just so amazing. I mean, where was your downgrade here at 71 bucks? Now it's trying to bottom and you're downgrading it? Wall Street's amazing. Info, 4 cents. I don't like the way it trades. UNF up 10 bucks. Bullish gap over this red bar. McGraw, let's watch that for a put spread. SCHN, 25 bucks. Put spread candidate. RAD had earnings. I mean, this thing's in a death trend. I like yesterday's engulfing though. Those looks like some bulls stepped up right ahead of earnings. Paychecks, 83 bucks. This, after 3 red bars and gapping down, even though the weekly and monthly, that's a very extended weekly. Maybe a short-term put spread candidate. But we'll come back to him. ATU 2350. There's a bearish gap for you for a day trade. Gapping under this entire 3-week consolidation. McGraw, this was yours from yesterday over the high. Looks good. BB, I don't, was that earnings? I don't know. There's nothing there. FedEx, there was an article in the journal. I didn't read it, but it was a bearish title. It said, oh, FedEx hit on slowing trade stuff. And the stock's gapping up $2. So, just the headlines. MU, this is, these 2 are my favorite gappers here. Well, 3, Lyft, SNX, and MU. MU looks great for a put spread and maybe 30-minute high and directional. USNA, McGraw, you've mentioned that. Let's check out a put spread. UVV, put spread. It's kind of reverse head and shoulders here. You know what, Greg? I had said to you, I sent you the charts. This is one to talk about, actually. Let me throw this on the charts. Because I have all beautiful reverse head and shoulders. And I said, hey, we need to find a not so clean one. And this one's not so clean, but it has other master trader strategies.
You'll have to explain that one, why it's head and shoulders.
Sure, be happy to. My pleasure. All right, I'll clean it up in a bit. Easy. Yeah, no, this is a perfect one to talk about. Absolutely. So I got that answered now. Just earnings 50, 60. Wow, that's a nasty gap. Boeing, we're still looking for entry. Plants, I want to short this on a bounce. You know, I got it out of Barron's. They said it's overpriced, but it was already down 3 bars. Intel, I would have expected a bigger gap on Intel with the positive SMH. Your work here, new IPO, that's a bullish pre-market. All right, SMH, look, SMHs are on my list too. MU looks great. Now this, it just depends how aggressive you are. I said 15-minute high and directional, but it's moving right now. Let me see what the puts look like right now, because I would sell puts on that. And that's such a bullish gap. I'm going to go out 3 weeks. So the July 12s, anything above 32. The 32 and a halves, 27 by 39, 28 by 41. So very spready.